Hello, what's up guys? Profit and H over here, and I hope you're doing great today. So on Monday I did a market breakdown on gold and showed you guys what I was expecting gold to be doing over the course of this week. And guess what guys, the market did play out exactly as expected. I was expecting the market to break below this area down here. Then I go in for sales. My take profit one was around this area down here. My take profit two was around this area down here, but the market did move further. It gave us about 434 pips guys. So after that I did another video on Tuesday explaining to you guys how I expected the market to be reacting around this area. I expected the market, after reaching this area, I expected the market to give us a pullback. Meanwhile, before it continues going down, before it continue pushing to the downside guys, and that's exactly what happened guys. So as you can see, yesterday we had some economic data that were coming out, and that economic data did give us this big candlestick you can see here. So this was just as a result of the economic data that did came out, but still the market did respect our setups guys. So the market came up to this area up here, it respected our setup. After coming to this area up here, the market started rejecting. So we had that first rejection at that point. Then it came back, gave us this double top at this point over here. Then after seeing the market has started rejecting above this area, I saw that this is a good opportunity guy for me to go in for more sales. So I waited for this 1 hour candlestick to close below this area down here. Then I took my entry at this point, putting my stop loss just right above this area up here. So as you can already see guys, the market did move smoothly. Right now we're trading about 300 pips guys. So right now we're trading about 300. We're trading about 300 pips guys. So that's crazy guys. You know having 300 pips on gold is just beautiful guys. So yeah, I'm gonna show you what I saw from the bigger time frame before deciding that this week I'll be looking for sales in the market or below. Yeah, so I'll go to the daily time frame and show you guys. I told you guys I normally do my analysis starting from the bigger time frame so that I can be able to understand what the market is doing exactly from the bigger perspective before going down to the lower time frame and trying to find out where I can be able to take my entries guys. So from the bigger time frame, this was on Monday. The market had already given us these bearish engulfing candlestick. Then after giving us this bearish engulfing candlestick, we did expect the market to give us this pullback after breaking below this area down here. So there was a support below down here, and as you can already see, the daily candlestick did close below this support down here, so showing us that there's a possibility that this market will continue pushing to the downside guys. So after that, the market started giving us these corrections. Then after that, I was expecting now the market to break below this correction area before we continue now pushing to the downside. And guys, the market did play out exactly as we did expect. So when we go down to the 4 hour time frame, let me show you what the market did. The 4 hour time frame is showing us how clear this market did play out. So you can see we had this impulse move, then we had this correction. After we had this correction, this 4 hour candlestick closed right below this area. And you know guys how powerful these bigger time frames are when it comes to taking your entries in the market. So it's like you never ignore them guys. Yeah, and also from the 4 hour time frame, we had so many confirmation. Actually, we had so many confirmations before we decided taking these entries, because as you can see above this area right here, the market gave us a double top. the market gave us a double top on this 4-hour time frame, and on the daily time frame the market had already given us that bearish engulfing candlestick, and right now we were on this correction. Those are some of the confirmation you should be looking for, guys, in the market before you decide to jump right into the market and take your entries, guys. So after the market did all this, we had this double top over here. Let me just mark it so that you can be able to see it, guys. We had these double tops over here. After we had this double top above here, so the market gave us these impulse move on the 4-hour time frame. But when you look at the daily time frame, this just a bearish engulfing candlestick, which is a sign of the market has the possibility of continuing to push to the downside. So I was expecting this market to be doing this. So let me go down to the 1-hour time frame and show you what I'm expecting the market to be doing more in this market. The market to be doing more. And guys, you know, tomorrow is on Friday, and on Friday we normally have economic data. Actually, the first Friday of the first month, the first Friday of every month, we normally have non-farm payroll coming out. So tomorrow we have non-farm payroll coming out. So if you're gonna be trading tomorrow, make sure you manage your risk properly, because during the NFP times, guys, the market is usually very volatile and it's crazy. So if you go in with the bigger risk or full margin, you will be disappointed. That's all. Yeah. So let me go down to the 1-hour time frame and show you what I'm expecting the market to be doing today. So, and actually I'm gonna show you how you can be able to take entries on this gold market after the market breaking down below these key levels that you expect. What should you look for before deciding to jump into the market and to take that entry? So for instance, this one above here. So how do I normally take my entries, guys? So for this market, let's say we are at this point over here, I'd wait for the market to break below this area, and not just breaking below this area. I look for this 1-hour candlestick. I'll make sure that this 1-hour candlestick has just closed below this area. So after this 1-hour candlestick has closed below this area, now I'll take my entry at this point. Then my stop loss will be just right above the immediate high. So in this point, this was our immediate high. At this point, this was our immediate high. So I'll just have my stop loss just right above there, of which that's what I did. I had my stop loss just right above there, because if the market fails to break, if the market fails to continue pushing downwards, the market will go up. Maybe if it does break above this area, then we expect it to continue pushing all the way to this area before it gives us another opportunity to go in for sales, guys. So but at this point the market didn't have any trouble, so we just pushed all the way to the take profit. And yeah, so we did take that. So if I was in this trade that's happening right now at this point, you should be out. If this was your target and you see the market has already missed with the, that's about 3 to 5 pips. Let's see how many pips we missed here. So if you're in this market, that's you missed with about 34 pips, guys. If you're in this market and the market has already given you 300 pips, guys, so there's no point of you continuing to hold and you already have all that, because gold is crazy. It might go all the way back, take out your, maybe if you had already adjusted your stop loss to break even, take out your break even and continues going down. I'm not saying that this market now will start going up, because I'm expecting to have at least this market continuing to go down because there's a key level that I did show you guys down here on the daily time frame, which I did call the neckline, because